Okay, trader Sean Kozak here, checking in with Golden Zone Trading. And in this video, I'm going to be walking you through our normal preparation and four-step trading process that our GZT Mastery students and our order flow and volume profile trade room uses every single day to day trade the financial markets. Now, before I get started, quickly, I just want to kind of relate with you. If you're watching this video, you're most likely looking to accomplish the same goals I do, as well as all of our traders do, with regards to, we want to make more money, work a little less, have a better quality of life. And in order to do that inside of financial trading, we need to be able to use tools that professionals use. And over a decade of trading successfully, teaching thousands of traders, the only way I've been able to string together consistent profitability is through using order flow and volume profile analysis. Now, the morning prep in our four-step trading process is really about creating an action plan. And what I'd like to do is I'd like to teach you that action plan now, and then I'm going to demonstrate the concepts through a live trade example that I've actually stopped and recorded so that we can actually go through and I can walk you through step by step how to actually trade it. Now, what we do in our trading room and what I'm going to teach you right now is it isn't rocket science. Trading can be difficult if we make it. I'm going to show you how to keep it simple. The first thing that we do is we always pick a directional bias. Sometimes the markets are trending, sometimes the markets are oscillating. We have to know whether we're going long or short based off our market environment. We look at correlation, we use momentum, we have custom scanners that we use that actually do all of the heavy lifting for you. And this answers the question, what are we doing and why are we doing it? Once we know we're either going long or short, the second step in the process is to identify the trade setups. Now, inside of our trading room, what we do is we have several different order flow and volume profile setups. Some of them are supply and demand analysis, some of them are footprint analysis. Today, I'm going to be teaching you an order flow print analysis trade known as the trap trader. Basically, what it's doing is it's looking at exhausted volume inside of the order flow and the time and sales. And the software easily detects it by printing signals on your charts so you don't actually have to make the complicated process yourself. Okay. Now, once we've identified direction, we've identified the trade setup, the third step in the plan is to assess the probabilities and plan the trade. We need to look at reward to risk. We need to have our money management and position sizing mapped out in front of the trade, right? We don't want to be going in blindly, fumbling with the orders. And we always need to know the rules around the entry and the exits while we map out the qualifying factors. The qualifying factors basically are different steps that we teach our traders how to increase the edge, increase the probability, so that you're not just depending on software, but you're also using software in combination with logical thinking that makes sense using order flow. Now, step 4 is you're in the trade and you manage it for risk management. We also need to manage ourselves through emotional management and expectations. I always teach the traders it's healthy to have a healthy bias. If the markets are strong trending, they're moving very smoothly, we can expect to potentially take a runner on the trade for a bigger move. If the markets are moving slowly, they're chopping around, it's really important to just get on base, consecutively make some money, and manage the risk. At the end of this process, we always journal our trades. We always make sure that our traders keep track of their statistics, so that we can evaluate the progression, we can make sure that we can string together consistency so that you can actually become a successful trader. Now, what I'd like to do, I'm going to move this out of the way for a second. Just going to move that here so you guys can see my charts, and I'm going to just quickly go over an overview here of what's actually on my chart. Now, I've recorded market replay data to demonstrate a concept for this video because obviously I want to take it slow and walk you through the four-step plan so that you can understand it doesn't have to be difficult to make a living as a trader. Okay, so this is basically a workspace of gold. What I've done is I've actually put the Superdome here, which is the ladder of price. This is really what's going on before a trade is executed. So this really maps out the intention of traders, right? People putting orders above price and below price, right? If we were to look at the chart and you had a bunch of sell orders up here, or even what's better is I could go in here and I could turn the inventory on, and I'll turn the volume profile off here so you can see it. And you'll notice here that these red histograms and these green histograms, if I just press play on the market replay dome, you'll see how it shifts around like this. Okay, well, what's happening is the order flow inside the Superdome is being transferred over to this inventory histogram on the hard right edge of the chart. And really, this is what we measure with regards to the intent to participate. It has nothing to do with actually what is being executed. So the way I always look at this is basically subject to manipulation. This is subject to, you or me could actually put an order above or below price and at any given time decide not to place that order and pull that order from the queue. So that really doesn't give us an intent of institutional bias. It doesn't give us an intent of actually what's taking place in the market. All it does is it just tells us that the people are intending to sell here, intending to buy here, but until they actually execute an order, it doesn't have any relevance. Okay, now the next step here is once an order is executed, once somebody actually places a trade in the market, whether that be you or me, whether that be an institution, a fund, a prop firm, whatever the case may be, once an order moves from the intent to buy or sell to the actual execution of order flow, this is where the data transfers to the time and sales. So down here you'll see there's a time and sales window, and depending on if the orders were bought or sold, the quantity, the timestamp, etc., this is the information that really has a bearing on the intent of what's actually taking place in the market. This is a gauge of intent. This is a gauge of confirmation. So the way we trade order flow is we can never gauge the intent of traders because that can always change. What we can gauge is the actual sentiment of execution, which allows us to look in the true aspect of order flow, and we can actually map out whether or not traders are being aggressive or conservative to the buy side or the sell side of the market. Now what you're seeing here on the charts, this is a normal price chart of gold. If I just turn these candles off, you'll notice that this is just literally a price chart of gold. If we strip all the information off of it, right, it's just a range chart of the gold market. You got some arrows here. We'll talk about those in just a moment. But what's happening here is that we're blindfolded to the data, which doesn't give us an edge. And if you're trading on a price chart right now that does not give you exposed data around order flow and volume, you're trading at a serious disadvantage to those who actually have those tools at their disposal. So what I'm going to do is I'm going to turn the print on. And what's nice about the software applications that we trade with is it's all custom graphics, extremely user-friendly, very easy to manipulate, very easy to learn and understand. As I said, trading has already got enough difficulty. We don't need to make it more complicated with software, especially with application. And you'll notice here we've got some highlighted green blocks and we've got some highlighted red blocks. This is basically our software detecting the aggression inside the time and sales. So what's really important here is that you don't actually have to be watching the time and sales or the Superdome to be effectively reading order flow, because our software transfers it from the time and sales and the Superdome over to our price charts. And then what we've done is we've mapped out algorithms that print arrows on the chart that looks for patterns inside the order flow process so that you're not having to actually pay attention to all the numbers. What's only important is that you pay attention to what these arrows are telling you with the proper directional bias. So what I'm going to do is I'm going to expand this over because, like I said, we're going to keep things simple. And I'm going to expand this over as well. In fact, I can actually delete this because we don't need it anymore. And what I'm going to do is I'm going to get you to follow along with me as I show you how to take a long trade on the gold market when we look at order flow. Now, you'll notice here that I have a green background at the bottom. Remember I said earlier that the first step in the trading process is about picking a directional bias. Well, the directional bias for us is very simple. When things are green, we go long. When things are red, we go short. We don't need to make things more complicated. Keep it simple. Just follow the plan. So we're going to look to go long the gold market right now in this environment. And basically, if you notice, it says the scanner and correlation. One of the things we use up here is a scanner. You'll see how it says a long bias. The aggressive entry pattern means that we have all rules met to be a little bit more aggressive with entry. And then these other columns here tell us that everything else is aligning, right? We have strong momentum. We have confluence in our oscillators, which is the directional bias tools down here that we trade with, and it's also telling us that we can be a lot more very, very focused on being aggressive to the long side, and then slope of the indicators are also on our side. So this is a really good indication of all of the stars lining up, right? And when the scanner is all green like this, directional sentiment is to the long side. Then we move down to step 2, and we literally just look for the patterns in order flow. Now what I'm going to do is I'm going to look for basically a long signal to plot in the next opportunity. In order for us to do that, we need the algorithm to depict, right? Let me just pause it here. Do you see how that arrow just came on the chart like that? What this is telling us is that inside the time in sales. Let's bring this over like that, and let's just bring this over like this so you guys can see this. What this is doing right now, this TL signal, is it's looking in all of the numbers in this bar, and it's detecting that as price is trading in here, that the sellers are decreasing, they're drying up, and they're basically telling us that they're becoming exhausted. So what that means for a buyer in the market is if the sellers are becoming exhausted, this is a high probability opportunity for traders to get long the market because the sellers have depleted in this area. And therefore the buyers can step in and actually drive prices higher. So very, very powerful information, very, very powerful tool to use to our advantage. And you'll notice how the software prints a racing stripe on our chart plus the arrow. Well, that's because we want to keep things very visual, make it easy for us to trade. So I've already got an ATM strategy loaded, and I'm just going to basically put an order down here. And as soon as the price bar closes, we're going to get long this market. And the reason we're going to do so is because we need to wait for the bar to close to be able to confirm that the order flow pattern is holding true. Because at any time, price can move up or down, and the order flow can change intra-bar. And the sentiment can change intra-bar. So what we're doing is we're basically waiting for confirmation on a bar close entry, which allows us to be able to maximize our effectiveness of getting into a good setup, right? Because we don't want to get in too soon and then all of a sudden the order flow changes on us, right? So let's do this. We'll turn it on. I'm going to speed things up just a little bit. Okay, and we're going to watch price as it trades up and down. Now you'll notice there's a green line and a red line up here. Okay, those are what we call a bar close marker, which will signal where the bar is expected to close. And that's going to tell us where we're actually planning on getting long the market. Okay, so we're actually planning on getting long the market as soon as the bar closes at 13.45.9, which will be the place in which the market is expected to confirm that signal as soon as it gets there. Right, now you could also put a buy stop order in here as well. I prefer to drag my order up and get filled on limit, because sometimes what will happen is if it goes up and right at the time it closes, if the signal disappears because the order flow shifts, now you're trapped in a trade that doesn't actually make sense. See how it changed there a bit? See how the arrow disappeared? The order flow is changing intra-bar. This is where we need to be very careful. We want to make sure that things are lining up for us. Now, you'll notice there's other arrows on the chart. There's TDSs, TDTS, VDS, right? These are different algorithms that are being depicted in the software, and this is what we'll teach you inside of our training programs to understand the different patterns in the order flow. Very simple to learn, very visual, but what's important is that we focus on one trade setup at a time so that you can learn to be effective first, and then you can move on to the next opportunity of expanding your education. Right, and the whole goal of this video is to show you application. So step 2 in the process is we've identified the trade setup. We're waiting to go long a TL signal, which is a trap trader long setup, which is essentially a print profiler trade. And step 3 is about planning the anatomy of the trade. So while we're sitting here waiting, step 3 is about making sure that we know where we're entering. Well, we know we're going to get long at this green line at the close of the bar. Our stop loss is going to go one tick below the low of the bar as soon as that bar closes. So our risk is always capped. And then what we'll do is we'll make sure that we don't have anything in the way of the market. We have nothing in here stopping price. Risk and reward will be favorable once we get into the trade. And once that takes place, we know that we have good qualifiers because we're using order flow plus direction to trade a very clean signal. Okay, so we're going to give it some time here to play out. We're going to make sure that we can give the market a little bit of breathing room. I'm going to speed this up just a little bit just to make sure that we can kind of fast track the opportunity for this video and demonstrate the concept. You'll see how price is trading down a bit. The order flow is trading down a bit. What we need to see is we need to see a green racing stripe, and we need to see a TL signal at the bottom of that candle. That's going to tell us that the order flow has become depleted, just like that, right? You can see how that changed. So what that's doing is that's telling us that the order flow is somewhat becoming exhausted in here. And as soon as that bar closes, okay, we're going to get long the market, but we're not going to do so until it happens. Right, so we'll give it a few minutes here. I'm going to speed this up just a little bit. It's getting ready to close, guys. Right, it's getting ready to close, and what we can do is I'm going to drag my order up right here. Okay, so as soon as the market gets me filled, there's the signal. So let me kind of pause this for a second. Okay, you'll see the entry is clean right at the close of the bar, the open of the next candle. The stop loss goes one tick below the level. Now you'll notice here we have a resistance level up here. Good place for us to take a target, right at resistance, because there was a structure high. These targets that we do are set through backtesting. Okay, these are set through backtesting, and what I'll do is I'll actually pull up the document that actually shows you some of the backtesting statistics on this, because I think that if you're going to trade a strategy, you want to make sure that you have an edge. We have an edge because we test all of our setups and we statistically prove everything out, right? You'll notice this is a TL signal. Okay, so a trap trader signal. My first target at 10 ticks gets hit 60% of the time, right? So we map out statistics through backtesting, right? You'll notice here that it actually hits 8 ticks 64% of the time, but I normally set my target at 10 ticks because I have a better return on investment at 60%, and it's just a cleaner way of trading. So I'll go over some of the stats here in just a moment. We'll look at the trading journal for the trade room here before we close out this video, but these targets are set based off backtesting principles because they have a statistical edge, and we'll talk more about that should you decide to join us in our trading room. Okay, so we're going to continue to speed this up a little bit. We're going to watch price here, and we're going to see if this pops up here, takes the target. So there it goes, guys. You can see how it popped up. Now, why did it rally from here? That's the question, right? Why did it have the potential to push up? Well, because as the market came up, okay, it pulled back, and on that pullback, the selling order flow became exhausted. So what took place is as the sellers became exhausted, the buyers had the ability to drive the market back up in a trending environment. Very important to understand, very easy to learn, and we're just making sure we're doing that with positive directional bias. Okay, we don't want to be trading against the market. We want to be trading with the market when order flow lines up to our favor, right? And you can see higher highs in price, pullbacks in retracement. Order flow signal tells us that we can buy with a clean exhausted volume entry, and we're using complicated data very simply, right? Because if you were watching the time and sales to do that and try to memorize the numbers and memorize what's happening inside the order flow, it's going to become very difficult to be able to focus on your application rather than your actual trading, right? So we'll go in here, we're going to take a look at how this plays out. I'm going to show you what I like to do for the stop loss management. I like to turn the volume profile in the bars on, and these black boxes are basically telling us that there's a volume, bulk of volume inside the bar. If you're like some of the other traders that don't like to look at the numbers, you just want to use the arrows, this black box is the volume profile inside the candle. And what that tells us is that we can trail based off volume profile rather than using rudimentary indicators, right? I think volume, and there's the second target. Okay, so what I like to do is I like to trail behind volume, right? And you can see the order flow coming into the market. You can see the order flow coming in on the time and sales, but what we're doing is we're not really focused on all the order flow that's coming in at the wrong places. We only want to get long the area and manage the stop loss based off the right areas on volume. You see how that volume came straight up to the top of that candle? I normally trail my stop loss 2 ticks below that volume, 1, 2 ticks. And as the market continues to push up, if this reverses here and takes me out, this is a very clean trade, right? Squeeze the market, take as much out as possible. The problem with using trailing stop indicators that say go here and here and here and here is that you always end up giving too much of the market your money. You give all that profit back, right? So that was a very clean buy setup. If I turn this on here, you'll see the entry, right? The entry was at the close of the signal, the target, and then the runner statistically set here. And you can use the order flow visually if you like to see that confirmation. You'll also see the aggression that came in on those price bars. That was mapping all those big institutional buyers driving the market up. Our software is going to show you when that's happening. What I'm going to do is I'm going to show you how to trade a statistical edge with very limited risk, with high probability, backed by statistical data. So if you notice here, depending on which markets you trade, right? We trade several different markets. We trade equity indices, we trade Eurex markets, we trade commodities, right? We trade currency futures. And what's nice about this is that we have stats on all the signals that we test through the order flow process. Some of them are hitting 70% profitability, right? Now, that's not necessarily the all-in, all-out scenario. We trade for a little bit more of a statistical edge through profit factor and so forth. But you'll notice that depending on the market that you trade, we've got stats to back everything that we trade. And we run these statistics every quarter. So we're about 1 month away from running our next batch of statistics. We've got the YM, we've got the DAX, we've got crude oil, right? We've got gold, we've got the ES, we've got bonds, right? The bond market is one of my favorite markets to trade. First target that I take is hitting 67% hit rate, which is very powerful, right? And then also the next one here, the second target hits at 62. You could also be taking a 2-tick target. We scalped the bond market on 3 ticks for 73% profitability, which is pretty powerful stuff. And this is the reason I can tell you that is because not only do we run back tests for our strategies, and we also traded in the live market. So this is the actual log from the trading room. The last couple days I took just under $1,000 out of the market in just under 3 days per trading week, trading very, very small size. So if you're somebody that's trading a small account and you're looking to trade for a supplemental income, you want to basically make a day trading living, or you're looking to just bring extra cash flow, you'll see here the last batch of trades from, I think it was the second to the last 2 weeks of trades, trading maybe 1 or 2 trades a day, trading 1s and 2 lots, took about $1,200 out of the market, $1,800 out of the market, right? So in 2 weeks of trading 3 days a week, running our room in the morning, trading 1s and 2 lots, take about a couple grand out of the market. Not too shabby, right? Winning percentage for the trading room right now, I'm sitting at about a 61% hit rate with $100 expectancy per trade, which is very good from a day trading perspective. If we look at the analysis sheet, this count started at 25K over 600 trades, sitting just under 200% return on investment over about 600 trades. So very, very powerful. Okay, very, very powerful. Everything that we do with Golden Zone Trading is about making sure that not only are we able to teach you how to use the software to be very effective, we're able to back it up through performance and statistics. And the biggest thing that I've found to be the biggest advocate for traders in our trading room using our software and our strategies is ultimately the ability for us to teach it to you in a very easy way. So if you're somebody that's burnt a whole bunch of money in the market, or you've been in a trading room where you've paid thousands of dollars for programs and you just haven't been able to get what you thought you should get, or you haven't received the support or the results that you're trying to achieve, I encourage you to go to our website. Okay, I'm going to pull this over here for a second. You're going to go to our website at goldenzonetrading.com. Okay, and there'll be a button directly below this video that you'll be able to sign up for a guest pass on our trading room, right? You don't need to buy anything. You don't need to spend money. All I want you to do is just come to our trading room, spend a week or 2 with us. We're not going to charge you. We're going to let you come in and see for yourself how we trade, the tools that we trade with, why order flow and volume is the only thing that can be consistently profitable longer term in the market. And if after that experience you think we are the environment and the community that you belong with, and you want to establish a business as a financial trader in the order flow and volume space, we can provide you the frameworks and the structure to do so. Okay? Yes, we have software. Yes, we have free indicators. Yes, we've got all these other nice bells and whistles. What matters most is, can you learn what we do? Can you analyze yourself how to actually do it? And can you make money trading it? I know we can. The question is, will you just join us and actually see for yourself that it's actually possible for you to do so? I thank you for watching this video. As the owner and head trader of Golden Zone Trading, it's a privilege that you showed an interest in what we do, and I look forward to trading with you in the near future. Sign up for a guest pass, and we'll see you in the live markets. Take care, traders. Enjoy the rest of your day.